Hello everyone, hope you're doing well. Welcome to another technical roundup video, specifically market update. Apologies for no Monday markets, internet stuff, but we're here now. As always, before we start, please do all the YouTube stuff, like, subscribe. Your support has been very much noted and the channel's doing well. And second of all, please visit FTX, specifically get the FTX app on your mobile phone. Best trading app on the market, portfolio tracking, all the good stuff. Wouldn't shill it if we didn't think it was good and or use it ourselves. So thank you to them for supporting the channel. Support them because they support us. Right, let's get to business. I'm sure your YouTube feed is inundated with spammy videos about big breakout coming, mega moon mission, massive green candle. So let's just add some context, some structure, and hopefully some reasonable expectations to this, right? So just to set the scene, we're still dealing within the monthly range, and we are just testing one of the key levels within that range. So highest close, the resistance at 58k or thereabouts. Lowest close, the support at 35 to 37k or thereabouts. And then if you take the midpoint of that range, just kind of eyeballing it here, you can see that it lands within this monthly cluster at 43 to 47k, and that's what we're going to delineate. So this is the real high time frame range for Bitcoin. Obviously goes without saying, if the range breaks down, we have to start looking at much older levels between 14 and 20k, but for now, support is supporting pretty well, right? Regardless of what Donald may think. No reason for him to catch a stray there whatsoever, but he doesn't watch my videos anyway, so it's okay. Now, the daily time frame is the one that's important. So this downtrend has been characterized by rather clear bearish market structure. Not only just number go down, but more importantly, the market essentially just making lower lows and lower highs the whole way. And the best effort it had at making a higher high was arguably this move here through this consolidation. But as you can see, looking at that without context doesn't make a ton of sense. First of all, least compelling higher high ever, right? It kind of just poked through this before retracing. But second of all, that retest took place, or that attempt at a higher high occurred at a key level of resistance. So it wouldn't be the most compelling long signal either. And since then, obviously the downtrend has slowed, which is good, right? It went from looking like this to looking like this. That's a change in trend pace to some extent. And now we're looking for evidence of something like this. And as the market is coming up to that same area, there are some specific considerations that come up as a result. So the elephant in the room is that this level has been tested like 3 or 4 times now, depending on how you count, right? So even if, let's take this for example, 1 test, 2, 3, 4, and where the market's coming up to a 5th test. Even if you don't count this, or maybe you count this as one swing touch, the level's getting beaten up, right? Now, in general, ranges don't last forever, right? As the market continues to move sideways, you kind of get open interest accumulation within that range, or broadly participants betting on one side of the range breaking. And then once it does break, it tends to be a pretty violent event. In any case, where a large part of that fresh open interest or that positioning built up within the range ends up being offside, it's forced to close, yada yada. Now, in general, from a technical point of view, the more a level gets tested from the same direction, especially while providing weaker reactions, in general, the more likely it is to break. Now, yes, in this case, you do have the whole context of the higher time frame downtrend and so on, but it's still important to bear that in mind. If we assess the reactions from this level, obviously first time round, completely nuked the market, made a lower low. If we take this as one test, second time round, nuked the market, but, relative to the last time, made a higher low. Third time, also nuked the market, but again made a higher low, and then the market's coming into it like a 4th time, depending on how you count. So you are seeing some build-up, potentially, of relative strength as the market's been testing resistance. But even then, you can see me employing some dangerous logic, right? Which essentially, the market's at resistance, and I'm becoming optimistic that, hey, this time it's different, this time it's going to break. I'm sure the participants who are long into this, based on the higher low, didn't feel so good about that decision and employed similar trade logic. So we still must be careful. Now, thankfully, we don't necessarily, and this is kind of the point of the video, need to make a bet on which direction the range is going to break. I think if you know how to trade the range break, or what, perhaps even more importantly, what not to do when it breaks, that could be just as valuable. So I think a couple things for me make sense as the market's testing this level. Now, the first is I'm personally not interested in outrightly selling the level. right? And that's simply because it's been tested too many times. Maybe this just turns into like an eternal crab chop range, which from a high time frame point of view would be quite cool for Bitcoin, right? You just hold 30K while the world melts, and then when the world stops melting, the number go up. That's like a good scenario. But from a purely technical point of view, no one says fourth test, best test for a reason. Now, in my opinion, follow the direction of the break until proven otherwise. Now, what does this mean, right? Now, I think even if you're bullish, you want to see 43, 44K, whatever, this cluster actually break, because otherwise you're stuck in the same boat as previous participants longing into the level who didn't have a very good time, right? Now, the reason that idea makes sense, as in waiting for momentum to prove to you which way it wants to go, is twofold. I think reason number one is that if this is a real range break out of this entire consolidation, it should go pretty far, like at least somewhere in the 50s, right? And therefore, there's no requirement to be long into the level if trading after the level still gives you plenty of tradable space, right? And the second reason is, if you wait for the break, you actually get some sort of clear invalidation, unlike all of these previous ideas, right? So if you get the clear impulse and consolidation just keeps going higher, you can really just map out the area of the breakout and say, look, this was a massive level of resistance. It appears to be broken. If the market is bullish, prices will be accepted above it, and we shouldn't be getting any closes below the level. If the market shows weakness there, I know how to get out without waiting for like this type of full retrace of the type we've had before. Right? Now, in the same vein, interestingly, if you're bearish, I think you can wait for something similar, but just wait for that specific rally to fail. That is to say, if you're bullish, I think the trade is to actually just let it prove to you that this range is going to break out and it's not the fourth, fifth, sixth breakout. Now, that entry might be a bit uncomfortable in the very short term because I expect a fair bit of volatility if the range break takes place. But really, given how much I also expected to travel if this is a real range breakout, there's no need to catch there'll be enough of a move as a follow-through to this type of consolidation, which means you can afford to wait for resistance to break. That's probably the best way I can articulate it. Now, if you're bearish, I'm less comfortable selling the level for the fourth or fifth time in a row, but I still think it's such a key inflection point that's going to get so many traders into the market, whether they like it or not, that doing business around there still makes sense. That is to say, as we discussed in the deviation video, right, if this is a range high, and the market pokes through it, and it looks like a very impulsive breakout, and everyone's like, oh my god, let's go, etc. And then the rally essentially peters out, and then is not accepted above the range high, and falls back within it. Whatever the apex of this move is, provides you with an excellent invalidation for a trade. You also have an excellent target in the form of the range low, and you also have a coherent thesis at that stage, which isn't, I'm selling the same level from the same direction for the fourth time in a row, but rather it's that the market tried to break from a key level. A lot of participants piled in and or were stopped out on that attempted breakout, and the breakout failed. And therefore, that's the kind of catalyst for a retrace for a move lower, as those fresh longs are forced to close. So, in any case, you can see that if you're bullish, I still think you want to see this 43, 47 break, because it would suggest that finally, after quite a long consolidation, this macro range midpoint is broken, and there is space to travel not directly to, but at the very least towards the range high. And I think that's a move worth entertaining, especially given that it'll be the first significant shift in market structure. It'll also give you a meaningful invalidation, all of that type of good stuff. In the same vein, if you're bearish, I am less compelled by selling the same level for the nth time in a row, although, it's reasonable if you have a very bleak view of volatility. But in any case, what would be bearish, and what I think would be maybe if not better setup, certainly the clearer one, would be the aforementioned breakout, yay, let's go, oh my god, it's a failed breakout. Everyone who thought this range was finally going to move on is wrong, and then you've got a very clear move towards the range low. So as I said on Weekly Open, this other chat we do with some friends, if you're bullish, you're looking at 43 to 47K. If you're bearish, you're also looking for 43 to 47K. If this really pops off and starts to rip, I mean, we'll probably do another market update video. But in the short term, kind of expecting these highs to go, and that's into a pretty nice cluster around mid 50s. Seems like a long way away, and I get that for sure. But just in terms of if the market really starts to teleport and reclaim this macro mid-range. What are some areas to look at? For me, swing high here, and then previous support turned resistance there. Hope that was clear. Hope that was interesting. Let me know in the comments. We'll do some more live stream market analysis stuff if things heat up. For the time being, thanks for watching. Let me know your thoughts, and see you on the other side. Take care.